What's up guys, I am finally back in Dubai and I am so happy to be here. I'm currently at the Dubai frame, which there is no way I'm going to get the whole thing in this shot, so I will show you some clips in a second. But Dubai frame connects old Dubai to new Dubai, which I think is very beautiful. But I want to get into price action today. I want to talk about an event that is coming up. It's been a little bit volatile in the market lately, so let's have a look at what this news event may do to the price of Bitcoin. Let's get into it. Alright guys, I am back in my hotel room taking advantage of the golden hour that we have going on outside. So let's get into this price action and what we've got to be aware of for tomorrow, most importantly. So what I'm going to do first is zoom out, have a look at the overall big picture, and then come into the smaller time frames and see what we should potentially be watching out for between today and the news event tomorrow, potentially what might happen out of it afterwards. Now we've had a lot of bearish news going on in crypto of late, which of course always seems to happen at local tops, doesn't it? So it's amazing how it works out that way. Magical as always. Now, if you are a regular of this channel, first of all, thank you for that. But you will know that quite some time ago, would be a fair few weeks now, I talked about this vector here on the daily, that at some point in time, I expected the market maker to come back to recover because there was a high liquidation level there. It lined up with the 200 EMA at the time. Plus, usually with big vectors like that, they do come back to recover them at some point in time. And if they did and they held that level and bounced there, then I still think somewhere under a 40k Bitcoin, maybe 36 to 40k would be possible next. So I'm actually not too afraid of a really deep pullback, to be honest with you, because that area lies between 21,700 and 24,500. Now there used to be a very large level of heat map buy orders at 24,500. They're not still there, but we'll have a look at the heat maps as well in this video. So by the way, if you are brand new to this channel, welcome. It's really great to have you here. I'm probably going to talk about a lot of things that you're not really used to seeing when it comes to trading, because I use a lot of other data besides just normal charts to decipher where I think price is going next. My main focus is on liquidation levels, because those are the levels that the market makers always come for, and heat map orders, which show me where there are a large amount of people wanting to buy or sell Bitcoin, or long or short Bitcoin, and that can sometimes lead to a bounce in price. So those two things are my main concern over just price action alone, which means you may hear some things on this channel that you don't find on other channels, because it's not really a typical way to trade. So I haven't actually touched this chart at all, so I just want to get rid of some data first so that we can get a clear understanding of where we are. And I want to have a look at this liquidation level here, because that one is at 27,556. We did spike down into there, probably a bit difficult to see, but there is this candle right here, actually even the current candle did spike into that liquidation level, so that would be gone now. And we did previously have a decent level of buy orders at 27,250. So I want to take a look at the heat map to see if they're still there. They're not still there. It's actually pretty empty both sides of price. The best chance we've got is 27,500 for the longs, but shorts want to short at 28k. Then if we take a big zoom out, the next level that we have of significance is actually all the way down here, which is 24,600. What do you know? So I'm going to actually mark those on the charts because they're important to keep an eye on. Here we go. And I promise you I didn't cheat on that one. I don't look at all of this data before I jump on here to talk to you guys about it. So what you're seeing is my fresh thoughts as I see them for the very first time. And I purposely like to do it that way because I like to talk through my thinking process as I explain things. Hopefully that helps you to understand this method of trading. But here's where I think, because those long orders are there, there's obviously people feeling the same way. Look how they magically line up exactly with the 200 EMA at this point in time, and the very, very top of that unrecovered vector candle that I spoke of. In addition to that, if you look from a retail trader's perspective, which I absolutely never trade retail trend lines, but I keep an eye on them because they help me to understand what retail may do when price gets to areas of interest for them. But if price were to come down to this level here and hit into those buy orders and bounce out of it, that would be the third touch to the trend line. So yeah, very, very interesting level. It is quite far away from where price is now, so it may get a little bit scary. We've only just crossed the 50 EMA on the daily time frame. We still need a retest of it to be bearish, which, you know, there's still 10 hours for that to happen. And also, just to keep in mind, at this point in time, those heat maps were showing the short orders at 28,000. 28,000 would retest that 50 EMA at this point in time. So yeah, not looking great. Well, it depends how you think about it, because I'm really happy to buy the dips on this one, to be honest with you. So the further it dips down, the better, in my opinion. But anyway, that's more of a investing process on my behalf rather than actual just day trading it. So let's take a look at the 4-hour time frame now that we know where we are in the bigger cycle. And the 4-hour is really quite tricky, because essentially since this day around here, which was when Friday the 17th of March until now, we've essentially just been in a range. So you know what that tells me is that we're probably in the process of shifting. So you've got the three trends. You've got micro, intermediate, macro, right? We can see now that the macro is trying to turn bearish with that current break of the 50 EMA. May not hold a bearish move if it doesn't retest successfully the 50 EMA. If it gets back above it, we'd be bullish again. But it's in the process of trying to break down. And depending on what the lower time frames are doing, we've got this middle kind of part that is very, very indecisive, doesn't really know which way it's going. That just makes the 4-hour time frame not the tradable time frame right now. You're either thinking macro and paying attention to what the daily time frame is telling you and understanding that levels that you want to buy or trade or whatnot are going to take time before they reach that level, or you're being very micro right now and you're just trading back and forth the small moves. You know, there's going to be small pushes up, small pushes down. Like there's going to be tradable moves on a very, very small time frame. But as a swing trade on the 4-hour time frame, there's no trade here right now. So you just have to figure out what type of trader you want to be in this moment, because right now, in my opinion, the swing trader is not it. So there's that. Also, just interesting to note that the 800 EMA on this lines up with an old 3-month liquidation level at 25,400, and that's really quite a large liquidation level too, by the way. So really, really would love price to spike down there, take that out first, because it just would help me to know that liquidity is gone now. There's not too much more below price worth it for the market maker to come for, so we may bounce through there. So I'm still bullish, even though I'm looking for a deep pullback. And I kind of like that there's all this bad news going around about crypto at the moment. The Binance stuff. What else was there? Vitalik selling Ethereum. See, I don't pay attention to this stuff. I just hear it and I'm like, great, thank you. I know that that's going to cause panic and fear. Great. I know that's going to cause greed and FOMO. Perfect. And I'm trading the emotion of how people will react to that news. I don't really follow the news myself, but it's good to me that it's coming out because I want this deeper pullback. So anyway, with that in mind, the 4-hour is really not our focus right now. So let's see if the 1-hour is giving us any important information. Now with the 1 hour, what you ideally want to do is usually zoom out to the last up to 5 days, maybe a week, but usually up to 5 days. And you want to try and see what level you are, where the last peak formation is and what happened since then. Now, a peak formation is the last point in which price peaked either to the upside or the downside before it caused that trend reversal. So if I'm zooming out, this is obviously longer than a 5-day period. The last peak I can see is way up here, which was on the 14th of April. Now, this isn't where I would start my count. And I just want to point this out because really you should only go back a week. When it comes to taking out liquidation levels and whatnot, the market maker really only cares about recent trades. Why do they do that? Because people who hold on to trades for a long period of time without getting stopped out generally are good traders. They know the peaks. They don't have FOMO. They don't panic sell. They don't have high leverage and no stop loss. And, they know what they're doing. They're able to catch those peaks and trade the swing without emotion. But people who are opening trades regularly and not closing them, that's the key, not closing them. They're the target because they're the ones who think that they just got in on the next big thing. So that's why the market maker really only cares about traders in the last 3 to 5 days. Now, having said that, a scalper, a profitable scalper, is a market maker's worst nightmare because scalpers aren't in the market long enough to get wrecked. So a lot of people say scalping is very dangerous because it's such a small time frame. There's a lot of noise. I say you're inexperienced, so you need to learn to read the noise. So there's my rant for the day. But anyway, now, so when I say it's a scalper's market, when you have that 4-hour time frame just going sideways and doing basically nothing, a 4-hour time frame range is an amazing range to scalp on a lower time frame. So if you're good at scalping, it's a scalper's market right now. So point being that this here, even though price has not actually increased or decreased really out of this range since middle of April, these are still 3-level drops here. This is still a 3-level rise. This is still a 3-level drop. This is still a 3-level rise. So when it comes to identifying your count, the peak formation is the last high of the week. That's where you are starting your count from there. So if we start from this one here, which actually happened on the weekend when the market was closed, we've clearly got one drop here on the 1-hour time frame with that 50 EMA break there with high volume. That's the criteria for a drop. Then we have the retrace here that created the lower high, also didn't break the 50 EMA. Perfect. Those are great signals. Did not come back and fully recover vectors that created the level 1 drop. Great. Everything there screams that this is a board meeting before the next drop, which is what it led to. And so this whole thing here, in my opinion, is drop level 2. And then this is another board meeting right here, and there should be drop level 3. Now, the reason I'm laughing is because the last time I said that didn't happen. Price went up from there. I think it was this one right here last week. I was telling you guys, oh, I've had 2 drops. We should have 1 more. And we went up and I look like an idiot. But anyway, it happens. You're not always going to be right. Like whatever. You just want to be more right than you are wrong in a way that allows you to be profitable. That's the goal of the game, really. But that aside, there should be, according to the count, 1 more drop on this 1-hour time frame. And considering that we have those long orders sitting there at 27K, that does spark my interest for us to hit that level and then reassess from there. It's not an automatic turnaround. And the reason it's not an automatic turnaround is because we have a news event coming up. So we've got CPI. Now I'm back in Dubai, as you guys know, so I'm sorry, my time zones just jump around all the time. I'm just pointing out events for you. This website is a free website. It's forexfactory.com/calendar. You just click on this little time up here and you can adjust it to your own time zone so that you can get the times of these upcoming events in your own time zone. So for me, it's tomorrow at 4:30 p.m. that we have CPI, Corp CPI, and these can be market movers. So then you think about the levels, because the 3 most important elements is the pattern, the timing, the levels, right? So timing wise, if you believe that you've identified the levels, then timing wise, you have to ask yourself, is there enough time before a next major news event to get that 3rd level that I think should be coming before that news event? And considering we've got now 22 hours at the time that I'm filming this, we've got 22 hours until that news event, the answer is yes. 22 hours is plenty of time to have another drop. Let's look at this consolidation period, for example, was 1 day and 10 hours. So, and what are we in for this consolidation period right now? Since this drop to where price is right now, it's been 20 hours already. Then after that, you take into account all of this, the time it took to drop. So yeah, there's definitely enough time for a 3rd drop to happen before that news event comes out. But I don't want you to think that that means automatic reversal. What it actually means, news news events mean high volatility, and you have to wait for that volatility to end, then assess where you are. If that volatility creates the final stopping volume candle of your third level drop, fantastic. That's when you wait and you look for the second side of a W before going long. Or it could remain, if you don't get a strong stopping volume candle and you don't get a nice push out of there, then it's a matter of there being a potential whole market reset from there. And we reject EMAs and we're looking for another 3-level drop. So, don't just assume that because we're in a 3-day swing to the downside right now and there's a news event tomorrow that we're automatically going to turn. We need to assess the volatility after or at that news event and see if it gives us that stopping volume candle, because that's going to be the telltale sign that price is going to reverse from there. And if we don't get it, expect a market reset, and all you'll be doing is waiting for retests of EMAs to then further short this. So it could be a very big move, but it could go either way. And that's it. That's the truth. I'm not here to tell you we're definitely going this way. No one can tell you that. We just have to trade what we see at the time. And so my goal here is to try and give you a heads up on what to look for at the time. Now, if you are wanting to trade this after the news event tomorrow, just to let you know that I do have a new deal going on with OKX at the moment. If you use the link in the description down below, you can unlock up to $30,000 in rewards. Now, you must use this link down below before this offer ends. And there are certain things you need to do that helps you unlock further and further rewards. So just check that out. The link is in the description down below. And in addition to that, you also get a ongoing 15% discount off your trading fees. So they definitely add up over time. Whether you win these rewards or not, you're going to get that fee rebate for life if you trade on this account. So yeah, check that out in your own time. OKX is my preferred exchange, as you guys know. So I'm very, very happy to be able to bring you that deal. Now, speaking of not looking at normal charts, this is one of the software that I look at to help me identify where people's liquidation levels are for people who currently have open positions. It gives me an idea of sentiment as well. So if we have a look down here, the delta at the moment is 10 billion to the shorts, meaning people are very, very bearish. The fact that we can clearly identify level 2 at the moment and are expecting a potential level 3. Level 3 is usually where people FOMO into short positions right before the trend changes. So it kind of makes sense that we are starting to turn bearish. We've got total short liquidations at 297, total long at 107. So retail are definitely more bearish than they are bullish right now. And the whole aim of the whole level thing is to have retail jump on at level 2, which seems to be box ticked with this $10 billion delta, and then have the final late retail traders jump on at level 3 right before the trend changes. So we'll see what happens there. Now, they do have long liquidity below price if they wanted to spike down. There's not a whole lot there, but it's still there. Areas of interest, our biggest spikes that we can find on here is at 26,800, and then we come down to 26,358. But the thing is, if price does start to drop, then this will increase because there will be bottom pickers who long without confirmation. So then that brings in more long liquidation levels. So we need to keep an eye on that. But have a look at the liquidity that is starting to build above price. It's really quite large. These spikes out here. So when you compare these spikes out here, which the more it spikes out, the more is in that price right there, compared to what's going on with the long liquidations, like, there's a lot more. So there's a lot more people jumping into shorts right now than longs. And these areas are easy targets for market maker to come back to. So we've got 28,300, let's just say, to keep it a round number, and 28,850. And if we transfer that lower level onto our chart, we can see here price could even retrace all the way up to here to this unrecovered vector. It could rebalance it and then come down for that level 3. So I would not be surprised if we build a very similar bear flag like what we've kind of built here kind of deal. If we build something like that now, it may have already broken with this candle right now, or it may end up just creating the second touch like that. It's too early to tell, but we could do something, we could range something like that and then have a final drop into tomorrow potentially, but we may not retrace all the way back there. That's not really the goal anyway. We don't really care how much it retraces because that's not a tradable thing at level 3, in my opinion. I don't try to trade the short at level 3 because you never know how far it's going to go. Just let it play out and then let's judge if it's going to bounce after that, or we're going to have a complete market reset and continue with even further downside. So those are my feelings on price action. I hope that was helpful. Be sure to check out our website if you want to learn this method in full detail. You can get access to all of our courses with a monthly membership. We've got 55 lessons just in part 1 of this system alone. We've got masterclasses. There's a whole bunch in there. So check that out. Link is in the description down below, along with the link to OKX where you can unlock up to $30,000 in rewards. And my whole toolkit is there with links to all of this stuff that I use as well. So check out the links in the video down below. Like and subscribe if you haven't already. Please, that will help me get these videos out to more people. And leave me a comment. What do you think is going to happen after CPI? Enjoy your day. See you guys soon.